Welcome to GRE. I'm your host, Keith Weinhold. Learn why I rejected my grandpa's advice about debt and real estate. Global home prices have surged, not just since 2020, but really for the last decade plus. How does America compare to the world there? Then the real estate market heats up in Florida. All today on Get Rich Education.
You're listening to the show that has created more financial freedom than nearly any show in the world. This is Get Rich Education.
Hey, welcome to GRE. From England's White Cliffs of Dover to Dover, Delaware, and across 188 nations worldwide, I'm Keith Weinhold. This is Get Rich Education. The fact that you want to get lots of good real estate debt, even now that real estate interest rates are off their all-time lows from a couple years ago, and really most all interest rates, I think to the lay person, it is one of those things that is easy to understand and yet hard to accept to get more debt. Since Americans have near record equity levels now, not enough people even ask where that equity came from. I mean, look, you probably don't have a big equity chunk in your home because you paid it down. You have fat equity in your home because it increased in value. Yeah, that's leverage, which was brought into existence by debt. Now, lay people can understand that, but yet it's hard to accept that truth.
What you just said is one of the most insanely idiotic things I have ever heard. At no point in your rambling, incoherent response were you even close to anything that could be considered a rational thought. Everyone in this room is now dumber for having listened to it. I award you no points, and may God have mercy on your soul.
Yeah, that's from an old school movie, Billy Madison from 1995. But did you ever get a reaction or a look like that when you shared abundantly minded GRE principles with them? Debt-free doesn't make sense. The wealthiest people have the most debt. The wealthiest and most powerful nation in the world has the most debt. But some people will still cling to old ways of thinking. They'll rationalize that debt is bad now because we'll say interest rates aren't as low as they used to be. All right, true. Well, also on the flip side, debt is better when inflation is high because it debases that debt. Inflation and interest rates tend to move in lockstep. So therefore, whether interest rates are high or low, that line of thinking cancels out. And of course, tenants keep debasing your debt by paying down your principal for you, no matter how inflation and interest rates are moving. And this all plays into how I was taught to think about money myself growing up, including the influence of my own grandfather. And I would go on to reject my grandpa's advice. As a kid, Grandpa told me to save money. You certainly heard that growing up. When I was about 20, I was visiting my grandparents on college break, and I still remember when Grandpa told me that when it's time for me to buy my first house, I should buy a fixer-upper. And though he never told me this next thing, he probably would have encouraged me to pay off your mortgage fast. I bet he would have said that one. Well, he meant well. And though I didn't deliberately spurn him, I have gone on to disregard all of my late grandpa's financial guidance. He was a great guy. Grandpa served in a war. He and Grandma raised my mom and uncle in a small, simple farmhouse on a 13-acre farm in rural Berks County, Pennsylvania. And besides raising livestock and growing crops, he was an electrician by trade. He was an even-tempered guy with a wiry frame. And Grandpa taught me how to fish for bass in their small farm pond, all with his usual thin smile. And he had a wooden trademark kind of toothpick pursed between his lips a lot of times. But see, Grandpa was born and raised in a pre-1971 world. his concept of money was shaped before Nixon depegged the dollar from the gold standard. And as we know, inflation ran rampant after Nixon depegged the dollar from gold. And then in the 1980s, the Bureau of Labor Statistics, they began to sharply manipulate the way that the Consumer Price Index, the headline inflation figure, is calculated. They used weighting tricks and other tricks to make the soaring inflation figure appear smaller than reality. Well, I was born and raised in a post-1971 world, so rather than focus on saving money, I want to get out of dollars before they're debased by inflation. I never bought a fixer-upper home. Though I truly admire Grandpa for it, I didn't have the DIY and electrical skill set that he did. That just didn't come naturally to me. And now, admittedly, and at its worst, maybe you can say that I'm part of the reason that Americans are less resourceful, or rather, perhaps American life is better, or maybe it's that with progress, we're all specialists now. I'd rather pay more for a home that's already new or renovated. This way, I spend my time, that zero-sum game resource of time, I can spend that on my best and highest use, and not texturing drywall, and not hanging cabinets, and not laying tile. I borrow dollars, not save them. On rentals, both tenants and inflation pay back the debt. So inflation flips dollars upside down. And Grandpa might not believe how iconoclastic I sound now. The heresy. Today, I borrow, invest, and own assets that create residual cash flow. And I would even spend dollars in some cases before they're debased. And along the way, I provide contractors and service providers with work. I employ an ongoing property manager, and I provide families with good housing. I doubt that Grandpa knew about how debt compounds the power of financial leverage. There's something good to be said for hard work. And my grandfather showed me that on the farm, maintaining the tractor, loading the coal bin, harvesting crops, and feeding the chickens. I mean, dude was amazing. He was like the Shohei Ohtani of skill set diversification, but the world changed. Over the long term, today's abundance mindset beats Grandpa's grind set. I love him for wanting the best for me. Grandpa never wavered on that. Ultimately, really, he equipped me to learn what's best for me and what's best for others. And I know I'm preaching to the choir here because our Instagram stories poll about paid off properties, it asked you this question: which one do you prefer? To pay off your home ASAP or to leverage up and don't pay it off? Okay, how do you think that result went? Well, the percent that said pay off your home ASAP was only 16, and those that said leverage up and don't pay it off is 84%. Yeah, you get it. 84% would rather leverage up and keep borrowing against it rather than pay it off. Your own home is some of the best debt you can get. Low rates, fixed rates, a long payback period, and you can legally kind of renege and go get a lower rate when they fall as well. And mortgage terms are not quite as good on your rental properties, but they are still advantageous when you go compare that. And, really another way to think about it is if you've got a $500K home, why would you tie up $500K in your home? You could perhaps have just $100K tied up in that home or in that rental property. Now, I've talked to you before about how many advanced world economies, foreign nations, they have house prices that vastly exceed prices in the United States. Canada's home prices are almost fully double that of U.S. home prices right now. Well, I've got some great stats here. They are sourced by the Bank for International Settlements on not the international house prices this time, but how those prices have changed since 2010. Okay, so what we're looking at here is 2010 all the way up through Q2 of last year. So 2010 all the way up to the middle of last year. And these are all inflation adjusted. So we're talking about a change in real prices. U.S. property was up 63% in that time, basically about the last 12 years. But the United States is not one of the top 10 countries for home price growth over that period. And here those countries are. Number one for growth is Iceland at 103%. Second is Estonia at 97%. Third for world home price growth is New Zealand at 97% as well. Chile at 95%, Turkey 91%, Canada up 90%. The top 10 for home price growth are rounded out by Luxembourg, Hong Kong, Hungary, and Israel. They're all between 80 and 85% inflation-adjusted price growth over those about 12 years. So they're all greater than the United States, which again was up just 63% over that long period. That makes American home values seem somewhat cheaper when you think of it through that perspective. America is the envy of the real estate world. It's not just our rule of law and high property ownership rights and strong diverse economy. It's that it's one of the few places in the world where you can lever up this much and still get cash flow and at these terrifically advantaged debt terms. And on the flip side now, we look at the worst nations for price appreciation over the last 12 years. It is a story of price contraction. Prices have dropped in these nations. Okay, so these are the worst 5. And let's see if you can guess at what all 5 of these have in common. Those 5 worst are Spain, Romania, Italy, Greece, and Russia. Russia being the worst at minus 33% inflation-adjusted house prices. And yeah, do you know what all 5 of these nations have in common? All 5 are losing population and losing the real estate prices with them. All right, what about the United States? How does our population growth look for the future? Well, we are just about surpassing the 1/3 of a billion people mark now. We'll have 336 million people by the end of this year. And over the next 30 years, we're expected to have a population increase from 336 million this year up to 373 million then, 30 years from now. And the proportion from immigration is expected to increase while the proportion from the birth rate wanes. And of course, this contributes to the growing renter society in America because people have a harder time affording the entry-level home. And, really, the entry-level home threshold, that is now largely considered to be right about $300,000. Yeah, that's about 2/3 of the value of today's median-priced home. And housing market research firm Zonda, they tracked home prices and home projects across the country. And they found, as you might expect, that the share of new projects for homes under $3,000 is declining rapidly all across the country, from Texas to California to Colorado to Ohio. They are vanishing everywhere. 300K homes aren't just being diminished in creation, they're just completely gone from a lot of markets now. The share of projects under 300K are just completely non-existent. Yeah, now coming in at 0% of the market for Riverside and San Bernardino, California. Now, of course, coastal California, new 300K homes, they are long gone. But Riverside and San Bernardino, they're about 50 miles inland. They're less expensive markets. Those properties are gone there. In Sacramento, they are gone. In Denver, 300K properties are gone. So the swath of non-existent, new build 300K single-family homes is growing and increasingly just nowhere to be found. But we have found a place where these properties do still exist, and it's in an American in-migration hotbed. Straight ahead, listen to our in-house chat about this and the overall warming temperature of the real estate market, and a cool upcoming GRE event to tell you about where I'd love to see you there. I'm Keith Weinhold. This is GRE. With JWB Real Estate Capital, Jacksonville real estate has outperformed the stock market by 44% over the last 20 years. It's proven to be a more stable asset, especially during recessions. Their vertically integrated strategy has led to 79% more home price appreciation compared to the average Jacksonville investor since 2013. JWB is ready to help your money make money, and to make it easy for everyday investors, get started at jwbrealestate.com/GRE. That's jwbrealestate.com/GRE. GRE listeners can't stop talking about their service from Ridge Lending Group and MLS 42056. They've provided our tribe with more loans than anyone. They're truly a top lender for beginners and veterans. It's where I go to get my own loans for single-family rental property up to fourplexes. So start your pre-qualification and you can chat with President Chaley Ridge personally. They'll even deliver your custom plan for growing your real estate portfolio. Start at ridgelendinggroup.com.
This is Rich Dad Advisor Ken McElroy. Listen to Get Rich Education with Keith Weinhold and don't quit your daydream.
Hey, well, I'd like to welcome in GRE's in-house investment coach, Naresh. Now, maybe you've never bought a property out of state before, and for almost a year and a half, he has personally one-on-one been helping you with that and with your overall investment strategy. And then he gets you matched up with the right financing and direction and actual property addresses through GRE Marketplace, and he does that for you free. Hey, Naresh, welcome back onto the show.
Hey, thanks, Keith. It's been a while, but looking forward to talking about this great real estate market.
You are often dealing directly with the providers, and you also know what buyers are looking for to our audience. So just talk to us about the overall state of the income property market today.
Yeah, well, I want to go back a few months and talk about how the market was a few months ago and how it is today, because I think you can really talk about how things are going when it's compared to something else. So if we go back a few months to, let's say, November 2022. So this was pretty recent. We're talking about 5 months ago or so.
Yeah.
The activity in the real estate buying process, just real estate in general, building, the activity was slim. There were very few people contacting me. There were, if you look at the publicly listed data, there was definitely a slowdown. If people were to look at their own properties and look at a chart of their property values, they'll see that there was a plummeting of asset values. And that was November 2022. And what's happened since then, because the Federal Reserve, as you've talked about, has slowly hiked up interest rates and interest rates have gone up, mortgage rates have gone up. What happened is sellers, agents, wholesalers, brokers, builders, they didn't want to see a crash. And what they did was they started honing up some of their own capital to incentivize buyers to make up for that higher interest rate. So now we fast forward from November, where there was no activity. I mean, literally, we had zero activity at GRE, not even a single inquiry on a property. So we've gone from that to providers providing incentives like, hey, the price is negotiable. This is just sticker price. Let's negotiate like we're at a car dealership, to free property management for 1 year or even 2 years, or free home insurance for 1 year or 2 years, or 2% closing cost credits, or X amount of X $1,000 off closing costs. The incentives go on and on and on. These were not available in 2022 because we saw a super hot real estate market with a ton of buyers all of a sudden turn into a dead real estate with no buyers. So people who are concerned with the state of the real estate market right now, they might say, oh, you know, the interest rates are so high. These incentives cut down on that interest rate. So your lender may quote you for a 25% down payment. And that's the other thing, because of the market we're in, 25% is the best you're going to get paying no points. If you pay 20% down now, you're going to have to pay points to buy down that rate. And those points don't go towards your equity. You're just buying down the rate. So anyway, with that being said, for 25% down with these incentives, we're now looking at the mid to high fives. So 5.5 to 5.9% interest rate, which is I mean, we're at 2018, 2019 levels at that point. So the state of the real estate market is still very strong. It's healthy. There's a lot of activity now with buyers, with investors, home builders. We work with a ton of builders. They're essentially trying to sell off all the builds that they were permitted for 3 years ago, 2 years ago. So builders aren't building as much as they were like after the lockdowns were lifted in 2020 and they started building like crazy. And this has again increased the demand of housing where they built a lot and now they're not building. They're just looking to sell what they currently have that hasn't been sold yet. So with an influx of people, we're seeing a baby boom. We have politicians talking about a bigger baby boom within the coming years and more immigration. That only increases the demand for housing. So yes, right now is still an excellent, excellent time to buy. November of last year, not so much, but right now, yes.
It's a paradox with this nationwide dearth of housing supply and knowing that that problem is even more chronic in the entry-level space that make the best rentals. Considering those factors, you would think that builders and providers wouldn't need to offer any incentive at all, but they have been recently. Some of them are continuing because of what's gone on in the mortgage market and with mortgage rates. So really, that's nationally. And then talk to us about the geographies that we work in that tend to be in the Southeast and Midwest and in the inland Northeast.
Yeah, well, first off, I want to say that we work with a ton, not all of our partners or providers are offering incentives, but I would say we just happen to work with a majority of them. So if you're listening and you're like, huh, he said a rent guarantee or a 2 years free property management or free closing costs. If these strike a fancy, then definitely reach out to me because I can share with you the best properties offering such incentives. And these are older properties, these are new construction. There are no more pre-constructions that we're dealing with because, like I said, pre-construction is so 2 years ago, 3 years ago. Those pre-construction properties are now available for sale and for closing within 30 days. So reach out to me, Naresh, Naresh, at getricheducation.com if these interest you. Now, as far as who we work with, like who's offering such great deals, what markets, we, Keith, are still seeing, I would identify two particular markets in Southeast, South, if you want to say the South, eastern part of the United States. So number one, all of Florida. Florida is still the hottest market that we're dealing with. Our providers are all offering big incentives, and we're seeing homes rented really quickly because, as you've covered, Florida has become a hotspot along with Texas as a destination over the past 3 years. And that continues to be the trend. In fact, Ocala, Florida, which we have tons of properties available in Ocala, Florida, brand new constructions, even quads. Many of our buyers are so hungry for quads because it's the closest thing to multifamily. And we finally have quads available in a market like Jacksonville, Florida, Ocala, Florida, San Antonio, Texas. We have a quad available there. That's a really hot market as well. But I want to bring up Ocala, Florida, because U-Haul, the famous trucking transportation company, U-Haul has a very good pulse on where people are moving, where their rentals are being rented.
Right.
And the number one destination they found for the year 2022 was Ocala, Florida. So that's an area, it's the world equestrian headquarters. The largest retirement community in the world is a half an hour away from there. So you have a ton of people servicing these very wealthy elderly people. It's a 55 and up community. So a lot of healthcare, a lot of service industry. You have a lot of IT jobs, engineering jobs, because Gainesville, which is home to the University of Florida, is only 40 minutes away. And Ocala is more affordable than living in that retirement community is called the Villages. Very pricey because it's like its own world over there. I've been there a couple of times. And then Gainesville also is quite pricey with the university and with the tech community there. So Ocala has become the next biggest city that's not completely rural farmland that has any sense of modernity. And so, yes, I'm identifying all of Florida, specifically Ocala, But then also Memphis, Tennessee for older rehabbed properties, both Memphis, Tennessee, and Little Rock, Arkansas. We're seeing a lot of activity there because they are lower priced entry level homes. They're rehabbed properties, fully rehabbed, turnkey gutted. So these are properties anywhere from $100 to $150,000 in Memphis and about 120 to 170,000 in Little Rock. So we work with a provider there who has a lot of inventory, and they are also offering some pretty incredible incentives that our other partners in Memphis are not offering. That includes 2 years closing cost credit. That includes free property management for 2 years. And it also includes a mortgage guarantee. So if they're not able to rent out your property, they will pay your mortgage for you until they find a tenant who will tenant that property.
Somewhat different than the rent guarantee that sometimes we hear about, where they will pay the market rent for you if you don't have a tenant in the property, but it's paying your mortgage for you.
Exactly. So you just send them your mortgage bill and they will pay it. But I will say the reason why they offer this is because they're putting their money where their mouth is. They're so confident that they will, that both Little Rock and Memphis, just like Florida, have become very strong places for people to move to because they're affordable. And you want to be buying real estate in affordable places because A, it's affordable for you, and B, it's going to be affordable for your tenants, which means you're going to have a greater tenant pool to fill that property.
Yeah, so Memphis and Little Rock, some of the most affordably priced cash flowing markets in the nation. And yes, these prices 100 to 150K for you Californians and New Jerseyans and New Yorkers. We're not talking about the down payment. We're talking about the total purchase price of a home in a safe neighborhood that can attract a respectable tenant in places like Memphis and Little Rock. And then when it comes to Texas and Florida, you mentioned U-Haul. They put out annual reports where they actually give some really good migration data to the real estate market. But with all the in-migration to places like Florida and Texas and the rest, sometimes I wonder, how does U-Haul handle, like, all their trucks end up in Jacksonville after a few months, or all their trucks end up in a place like Ocala or Central Florida where so many people are moving? Yeah, it's just interesting to think about what they do with that problem. They need to get all their trucks back out of places like that after all of the in-migration. And because Florida, it really is so predictable that the in-migration will continue. It's been such a long trend. It picked up during the health crisis. And we have an upcoming webinar in Florida. Tell us about that.
Yeah, well, this is with one of our hottest Florida providers. They've been hot because of a special, you've mentioned it on your podcast, you've mentioned it in your newsletter. I've mentioned it in my communications with students and clients. They had a 2+2 program of 2 years free property management plus 2% closing costs. But we're doing a webinar with them next week. It's going to be next Tuesday evening. If you go to grewebinars.com, you can find out about the webinar and also register for it. They've gotten rid of that 2+2 program because they are unveiling a brand new promotion, a brand new program that is even better than the 2+2. So if you missed out on the 2+2, we're right now in this 2.5 week period where there's no promotion and you have to pay retail price. But if you stick through it, join us on the webinar next week. They are, like I said, they will be announcing a brand new promotion that is, the 2+2 was an incredible, incredible program. I think this is way better than even the 2+2. So this is certainly exciting. They're going to be coming on the webinar talking about Ocala, like we just talked about. They have built the quads in Ocala that we have available. They've built duplexes, single families, and not just in Ocala, but all around Florida. And they are offering incentives and discounts to sell these properties. So highly recommend people check out grewebinars.com to register for that webinar next Tuesday evening.
All right. And for our group attendees on our webinar there, you're going to have incentives for these new build Florida properties, oftentimes single family homes up to fourplexes and larger, that are even better than the 2% closing cost cash at the table for you, and even better than that 2 years free property management. They are going to roll that out to you at the webinar next week that you want to be sure to attend. We'd really like to see you there. That is our live event on Tuesday, May 2nd at 8:30 p.m. Eastern, 5:30 p.m. Pacific. And Naresh is starring in that one. It is completely free for you to attend. And the benefit of you attending it in person is it is live, and you'll have a chance to ask questions, and maybe have another attendee that asks a question that you didn't think about asking that's a really good question. So you can kind of crowdsource all the questions and ask a question yourself there at the live event at grewebinars.com. You have any last thoughts, Naresh?
Well, I will say this. One of the best parts about the webinar for serious buyers who are looking for that next deal is our provider will be providing the best deals they have available. So they're coming with 2 to 3 of their best deals. So this isn't one of those things where it's like, oh, Naresh is just going to send me an email after and I'll see everything, or I'll watch the webinar replay. Yes, there will be a webinar replay, but the chances of those 2 deals being sold out during the webinar are extremely high because of the incentives and the deals that the provider is providing. So I highly recommend try to make it live. You want to get in on these deals. If you miss the webinar, hey, not to worry. We're going to have the replay. Maybe they'll have some other properties that are comparable available for sale too, but you want to be there live, get your questions out of the way and move quickly, because our last webinar that we did, Keith, for Baltimore, it was probably our best webinar yet. And we moved properties. We moved properties very quickly live on air. So that's why I just want to let our listeners know, hey, things are really picking up in the real estate market again. Things are picking up at GRE. So you don't want to be left behind.
These are attractive incentives for Path of Progress, Florida, usually new build properties for you next week, again, at grewebinars.com. This is exciting stuff. Thanks for sharing this with us, Naresh.
Thank you, Keith. Always a pleasure.
Yeah, well, 25% down and buying your mortgage rate down into the 5s creates some cash flow. But as you'll see on next week's live virtual event, it is going to get better than that. Purchase prices on these brand new single family homes are still below $300K, still in the 200s in some cases. Yes, these are the property types that are quickly vanishing. Naresh can find both the good deals for you with the national providers that are actually giving incentives like the ones that we talked about. And this is all despite the fact that the product that you're buying is in really short supply. So that's for income properties, single family rentals up to fourplexes in Jacksonville and Ocala and elsewhere in Florida. And now if you want to get a hold of Naresh for the latest on GRE Marketplace nationwide properties and who has the best incentives, you can go to gremarketplace.com/coach and you can get free direction and coaching. He would like to see you for next week's live event, though. Besides just getting a solid fundamental education on what makes a durable income property market, Naresh and the Florida provider are going to share with us, just for webinar attendees, those even better than 2 and 2 incentives. For you, the incentives on the webinar, yes, are even better than the 2% of your closing costs paid to you in cash and 2 years of free property management. Again, this is next Tuesday. It's May 2nd at 8:30 p.m. Eastern, 5:30 p.m. Pacific. Naresh stars in this one. It is free to attend, get your questions answered, and get access to properties should you so choose. Be sure to sign up now while it's on your mind at grewebinars.com. I'm your host, Keith Weinhold. Don't quit your daydream.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.
The preceding program was brought to you by your home for wealth building, GetRichEducation.com.